Hey, Mountain Crypto Advisors, Blake Shaper here. Excited to give you an update on some of the tax preparation that we're doing around your crypto transactions at Brookhaven, but also to discuss some of the processes and software that we're going to use going forward. You're going to hear a number of videos compiled within this larger video by a few different folks, including Crypto Coffee, Megan Barr, and then myself again at the end walking through one of the documents that we're going to send you. The purpose of this video is really to lay out some of the limitations of Koinly, but to concurrently give you guidance in a more advanced manner as to how you categorize certain transactions in Koinly. Second to that is some of the information that Crypto Coffee is going to share, which is going to center around a way to gather certain historic data as it pertains to your stakes. So let's start with Koinly, and before we transition to the next person talking, I just want to walk through something I've already said before. I just want it to be crystal clear. We all know and agree that Koinly has certain limitations, and it appears that the largest limitation has to do with the staking mechanism of Hex, or really any proof of stake. Although Koinly tends to read the stake coming in or the stake ending, it has a very difficult time from our experience tracking cost basis, which is the amount that you originally paid associated with the stake that is either coming due or you're restaking. And that information is critical when it comes to tax preparation, because it is the basis by which all taxable gain or loss is based upon. And Koinly seems to not track that information perfectly. The other information outside of proof of stake mechanisms seems to work okay in Koinly. Any proof of work type crypto, but also off-ramping and off-ramping, from Hex seems to be tracked pretty well. So it's got its benefits on one hand, but it's also got its limitations. We can't attest that Koinly's perfect, even in those areas that it does serve well. Softwares always have bugs. We can only depend on them to a degree, but it seems as though, at least in that category of proof of work and off-ramping, on-ramping from Hex, it works pretty well. It's still going to be extremely critical that you go through your transactions, and Megan's going to cover this later, and ensure that you don't have any junk within that transaction list, that everything is accurate and complete. If you're missing a transaction, you can manually add it. If something appears that for whatever reason shouldn't be there, removing it, whether it's duplicative or was just junk that you never really received but is feeding in for some reason, you're going to need to go line by line. And I realize that is painful, but there's not really a solution until we've got a software that can better read proof of stake mechanisms from a tax preparation standpoint. Until then, which again, we are hoping to have sooner than later, but that's still a work in progress, we're going to have to go through this exercise. Now, one of the things that we're going to provide you, both for the tax prep for last year, but also going forward, is an Excel document. I know that's super exciting. Everyone loves to work within Excel, being sarcastic, obviously, but this Excel document, pretty simple. It's going to give you a methodology by which you track your stakes ongoing. So we want to get ahead of this early year, trying to remember everything I did over the past year, because that's just not realistic. We're not expecting you. It would be unrealistic of us to expect of each of you to remember each stake that you made last year, how much you staked it for, what came due, because there's a lot going on just within the crypto realm and in life in general. So the best way for us ongoing, so this is more of an improvement going forward than it is really for 2022, is to have you record that activity in a very systematic and standardized manner, so that when we get to this point at the beginning of each year, we have something to reconcile Koinly off of. Because right now, you probably, unless you're doing it on your own and keeping track of your stakes, you probably don't have an accurate and thorough list of exactly when you staked, how much you staked, and how long that stake is going to last. And that information is critical, not just to have an audit record if and when the IRS ever knocks on the door, but also for the calculation of your tax due, if anything, or loss, if you had a loss and you're receiving a refund. So that information going forward is going to be critical. The onus is going to be on you because we won't know both for 2022, really any previous year with certainty whether or not your transactions are accurate. You need to, as the person that exercise those actions throughout last year, go through that list and at least opine on what you believe is complete and thorough and what, if anything, needs to be removed or added from that transaction list. So Koinly, like I said, is going to be a part of this exercise. And it might be the only thing you have to do depending on the level of staking that you've had over the past year. If you did a lot of staking last year, and I realize that's subjective, there's not a hard line in the sand, but if you had a lot of stakes come due, because that's really what we're looking at here as it pertains to the limitations of Koinly and that cost basis tracking. If you had a lot of stakes come due, more than a handful over 2022, it might be worth your time going through a little bit more due diligence in what you had into those stakes, what the cost basis was, when you originally staked them, how long they were staked for, when they came due, all of that basic data, which again will help inform your tax picture. Now, do you have to do that? You don't have to. Is it ideal that you do that if you have more than at least a few stakes? Yeah, probably. If you had a few stakes and you just wanted to do it in Koinly, could you do it? You could. Now, Koinly defaults, and this is said on the Koinly website. This is not me saying it or attesting to it, but I have seen it. It defaults to a zero basis assumption if you don't have basis information present. And like I said, for certain stakes, it has a hard time transitioning basis from when you started the stake to when you ended the stake. It loses track of that. And that's just a limitation of their coding. So when Koinly doesn't know what you paid for a stake, it assumes zero. Now, that's the most conservative assumption if you're talking to the IRS, because that would be the maximum amount of gain or the minimal amount of loss that you would realize in a taxable event. So from the IRS standpoint, that's pretty dang conservative, assuming that you've reviewed your Koinly transactions and the stakes are listed in there and categorized appropriately. That's really hard to attack from a you owe us more money IRS standpoint, because it's the most aggressive conservative position. Aggressive conservative. It almost sounds like an oxymoron. It's the most aggressive conservative position. But it's also a bit misleading, especially if you do have a taxable event, because that's going to inflate any taxation that you had. If you bought something for $100 and you're selling it for $1,000, you're paying $900 in capital gain, assuming it's a capital asset. But if Koinly assumes it's $0, just for the sake of round numbers here, you're paying $1,000 in capital gain. So it's going to inflate any type of taxable event that you've got on the gain side, but also limit any type of taxable event on the loss side if there is any. So we've got to keep that in mind. But if it doesn't make a material difference to your tax bill, you can decide to do that. And again, maybe it's a few stakes that you had, they weren't a ton, you didn't off-ramp them. It might not make a heck of a big deal if you used Koinly and just use Koinly. Now, that's not going to change my opinion or Brookhaven's opinion that you need to keep a record of stakes going forward in the document that we send. But as far as 2022 is concerned, or any previous year, you might not need to go through what Crypto Coffee is going to go through here in a second and really get into the weeds on exactly what stakes you got that ended in 2022 and tracing them all the way back to the beginning. We could do that at Brookhaven. Is it realistic that we do that and not charge you an arm and the leg? Not really. We don't want to overprice tax returns. We want to keep them economical. We want to keep them as low as we can, especially right now when we're in this winter that hopefully will turn tide here pretty soon. We don't want you overpaying for work that you could do yourself. So our default right now is that It's ideal not just because you know what you did better than we do, but also just from a cost standpoint for you to review Coinly and for you to populate, if you so desire, the Excel document that we're going to send for the previous year. And then going forward, just keeping, and we're gonna try to reach out to you each quarter and give you a push. Say, hey, are you populating your stake tracker so that we've got a way come next year to reconcile everything again? So this process should get easier and easier going forward. Again, we are building this process around you as a person, as a community. We want this to be as efficient as possible, and it's not going to be perfect out of the gate. It was not perfect last year. It's not going to be perfect this year. Probably won't be perfect next year, but we are going to make changes and take feedback in every single year on how we can tailor this process and eventually build proprietary software, hopefully with some of the folks in the MCA community, in order to streamline this process more and more and more. So this is one more step towards streamline and efficiency. So I'm going to talk about that at the end of this video. A few other things outside of Coinly, outside of the tracker that we're going to send you, is really just understanding the process going forward. And we've already said this before. We're going to send out some information to you, this document being one of those things, and then the videos on Coinly. And it's going to be your responsibility to get through all of those transactions by the end of February. Now, is it a huge deal if you don't get through the transactions, if we don't have tax documents from you by the end of February? Probably not, but we're not going to be able to calculate any taxable payment that you need to make with your extension if we don't have the data in order to calculate that payment. So this end of February deadline, both for document submission, but also crypto transactions, is critical more for the tax extension payment if you owe anything than anything else. We're going to have some time in between end of February, early March, and when you actually file your return to gather anything else necessary, to ask any other questions, and to really pin down the specificities prior to the filing of your return. So we've got time there, but we want to move with a sense of urgency and getting data in. So the next video you're going to see is Crypto Coffee. He's going to walk through his process for gathering information on historic stakes that have already come due. How do you get that information if you didn't record it on when the stake started, how much you had into it? And it's not a perfect process, and it's definitely not efficient because you're looking at different areas. It's going to take some time. Again, this is if you want to record this data, you're going to take this data and you're going to put it into the Excel document that we send you. And that Excel document will be uploaded to Intuit Link, just like every other document you've got. And we're going to use that to prepare your tax return. That document, along with Coinly, because maybe in your head you're saying, well, if I'm going to be recording all my stakes in this Excel document, why the heck am I even using Coinly? You're using Coinly for really everything else outside of the staking mechanism. And it doesn't matter if you're in Hex 100% or some other proof of stake and you've got very little outside of that, you still are going in and out of ETH. You've probably gotten airdrops. You've probably, I say probably because most folks have gifted crypto to other folks. You've probably moved crypto from wallets that you want to make sure isn't taxable. So there's still a need for a systematic way to track that. Coinly is what we prefer just because it works the best in our opinion. It's not perfect. You can use anything you want. If you don't want to use Coinly, that's fine. Again, we can't attest to its accuracy fully, but we understand it not as experts, but as folks that have done some research here, not just on how it works for crypto at large, but for Hex and the Hex ecosystem specifically. That's really all I've got for the intro here. Crypto Coffee is going to go through his piece, then Megan Barr is going to go through the Coinly piece, and then I'll circle back at the end and go through this document that I'm going to be discussing. We'll send you the document so you've got it and you can have it pulled up if you'd like as Crypto Coffee is going through his portion. And if you've got any questions, let us know. Tax@TaxMindful. And look forward to talking to everyone here in the near future.
Hey everybody, in this video I'm going to explain to you how to attempt to do your taxes and provide the relevant tax information to Brookhaven and MCA using the tools that we have at our disposal, namely CBOE Digital, Coinly, Etherscan, and Go.hex.com. Now, I'm coming from the perspective that you guys, for the most part, are Hex holders and Hex stakers, and that the vast majority of you, if you've taken any profits at all or cashed out any gains through CBOE Digital to your business bank account, that the profits are primarily from sales of Hex or maybe other similar assets like Hedron or really any cryptocurrency. But I'm going to walk you through an example of how I'm choosing to go about providing the necessary information to Brookhaven, because there's really not a clear right or wrong answer. Now, although it's a gray area, there are certain steps we can take to ensure that we are giving and providing relevant, verifiable information so that in the worst case scenario, which is obviously an audit, right? The worst case scenario, which is unlikely to happen, but if it does happen, we want all the data that we provide to the IRS to be verifiable on a public blockchain somewhere, because that doesn't really get much more. You can't argue with that, So as long as there's a paper trail and a track record for essentially, the date you acquired your Hex or the date you sold your Hex, as long as you can point to a blockchain and say, hey, look, these are the transactions that happened, and then you can point to CBO Digital and say, hey, look, this is the day that I sold Hex. And again, for the sake of the example, I'm just going to be going over, my personal example, which only involves a simple sale of Hex. And I'm going to go over how I'm choosing to report this to the IRS and the data that I'm choosing to provide. So my example is going to be simple. I only had one sale for the entirety of 2022, and that lasted me throughout the whole year from that one particular sale. And that all starts on CBOE Digital. So for my process, you guys can follow along with me and do something similar. If you sold cryptocurrency in 2022, I'm kind of I'm backtracking essentially from the point of sale on CBO Digital. I'm backtracking back to, Etherscan, and then even backtracking one step farther into Go.hex.com to get my initial cost basis for when I quote unquote purchased Hex. For me, that was the adoption amplifier. For some of you, it might be through Uniswap or a mixture of both. Through when I actually sold the Hex into Ethereum, and then Ethereum transferred that to CBOE Digital and sold through CBOE Digital. Now, my case might be similar to yours as well, where when I sold Hex, I temporarily parked it in USDC for about a week, and then I transferred that USDC into Ethereum and into CBOE Digital. That's not so much of a problem at the end of the day, in my opinion, because the end result is very similar. As long as you weren't holding, the USDC for many, many months and then transferring it into Ethereum, the cost basis is going to be relatively the same. And as long as there wasn't a lot of price movement from in between that, parking in USDC to Ethereum. Now, some of you might have just sold Hex or sold crypto directly for ETH and then transferred that directly to CBOE. That just makes it even more simple. But take a look at my screen here. I'm going to try to walk through how to go about finding the necessary data, which is really like picking out a needle in a haystack, quite frankly. So you're going to have, I'm guessing you're going to have hundreds of transactions on your MetaMask accounts, depending on how complicated of a user you are. Some of us are power users, and I understand that we trade in and out of altcoins sometimes often. And there's things like Hedron, things like Icosa, airdrops like Pulse Dogecoin. And then there's all these random airdrops and spam coins that people send us all day long that just makes all of the data in our accounts, when you're looking at Etherscan, it makes it all very complicated. And for the most part, a lot of these transactions are totally irrelevant because they don't involve the sale of any crypto at all. And they're just not relevant to the IRS. But that's what I mean by picking out a needle in a haystack is, let's say your account like mine. My account on MetaMask had something like 900 transactions, but really only 2 or 3 of them, maybe 4 of them actually mattered at the end of the day. Now, how do you go about finding these transactions? I'm going to try to help you, so stick with me till the end here. Like I mentioned earlier, we're going to start off in CBOE Digital because this was the point of sale. We're going to backtrack from the point of sale and go back to find only what's relevant. If you're like me, you have no idea what date you sold crypto on or when. And I don't remember all the transactions that I've done internally in my wallet. Luckily for us, really the most important thing is when did the cash hit your business bank account? So that's all going to be clearly visible through CBOE Digital. And if you look at the screen right here, all of my trades, again, I only made basically one sale in the entire year. All of my trades can be traced back to May 12th, 2022. So I know that May 12th for me is the date that I'm going to be trying to filter for when I backtrack into Etherscan. Now, I know Coinly is another option as well that you can use to input your public address into Coinly and search all your transactions that way. At the end of the day, Coinly is kind of assuming that we are day traders, or that we are, trading from a centralized exchange. So when you plug in a public self-custodial wallet into Coinly, and you plug in your personal MetaMask wallet address into Coinly, it's basically just going to read all the data that you would still be able to find on Etherscan. It's really not much different. In fact, Coinly kind of miscategorizes a lot of things. For example, anytime a coin comes into your account, on Coinly, they write that as a gain, and every time a coin goes out of your account, Coinly writes that as a loss. For example, right here, look, I sent Hedron from one address to another, and it's for some reason categorizing that as a $783 loss because it doesn't know what to do unless you go in and manually fix every single transaction, which is quite frankly a nightmare and not necessary. So Coinly is a good tax reporting software that allows us to output very neat and very clean capital gains reports for tax purposes. And what's great about Coinly too is that it actually does not reveal your public address to the IRS, which I really like. It just gives you a very clean looking capital gains, profit or loss report for the year of 2022. But the problem is with Coinly is that if you simply copy paste your Ethereum public address into Coinly, it's going to read all of your transactions and it's going to have to try to categorize them in some way. And 99% of the time that categorization is incorrect. Just because I'm sending coins to and from various wallets that I all own, right? I could just be simply sending to myself and Coinly is going to write that off as a loss. Or somebody could send me a random fake airdrop, those scammers that just make up coins and try to trick you by sending to random people. Well, all those coins just add, irrelevant miscellaneous data to your Coinly transactions history. So at the end of the day, what I want to do is filter all this stuff, find those needles in the haystack, find the relevant transactions and put them in a separate Excel spreadsheet, or I just use Google spreadsheets because it's free. So I'm just going to be adding all my transactions that matter to Google Sheets. Okay. So Coinly is great, particularly for the output file that it gives you with the capital gains and loss reports. But when it comes to filtering your transactions, you might like the look of this better than Etherscan, but it's essentially the same as Etherscan. Now, if you're the kind of person that has a relatively simple transaction history, that's not me, guys. Like I said, I've got 900 and something transactions. I have no idea what's what, but some of you out there might have a very simple transaction history with only a few transactions. And in that case, Coinly might work for you to just copy paste your Ethereum address into Coinly and scan through your list of transactions just to make sure that they all seem right. But I'm suspecting that for 99% of us, we've got a complicated transaction history and we only need to go find what matters. So you can choose to go find what matters in Coinly or you can choose to go find it in Etherscan. I'm just more accustomed to Etherscan, so for the sake of the example, I'm going to be backtracking to Etherscan instead of Coinly and using Coinly basically just for the final output, because you can input an Excel spreadsheet into Coinly and then Coinly will generate a profit and loss statement, a capital gains report, based on your manual input from a spreadsheet. So I'm just choosing to go that method, and it's not an official recommendation, but it might help you when you're trying to gather all the right data. So remember, CBOE Digital, May 12th is the date that I was looking for in terms of my sale. And then I'm going to go hop over to Etherscan. And you guys probably have used Etherscan before, but you just want to find in the search bar, copy and paste your MetaMask address into the search bar. And you're going to go ahead and get a list of all your transactions that you've ever done. Now, this is not my real wallet. This is just a random wallet that I picked out of all the Hex wallets. So keep in mind, this is not my actual address, but it works for the sake of the example, okay? Once you search for your public address on Etherscan, you can really simply just scroll to the very bottom and click View All Transactions down here. This is going to allow me to figure out which of my transactions happened around that May 12th date, so I can find the verifiable blockchain record of when I sold, Hex or whatever other crypto it might be for Ethereum and then sent that Ethereum to CBOE Digital. So to make it a bit more simple, we can actually filter by token transfers from ERC20 tokens only. That's going to help me just filter out irrelevant Ethereum transfers. So it will only show me, Hex or Hedron or whatever other coin, it'll show me my ERC20 transfers only. So you can see here 36 days ago, this wallet, had 140,000 Hex in, 142,000 Hex out. This is where we want to be, and we want to look for the transaction that happened around, remember, May 12th or whatever your transactions were on CBOE Digital. We want to start looking for that date range. So we're looking for May 12th, right? And so we're going to hop over to Etherscan, and if you hover over the age, it's going to tell you the actual date. So it's much easier than trying to figure out 36 days ago. It's much more easier just to hover over this date, this age column, and then you can just read, okay, this was January 7th, 2023. We need to go a little bit farther down to find May 12th, 2022. Let's go to page 2. Let's keep looking, going down. This is September 26th, 2022. We need to go back a little more. Let's try page 3. Let's go all the way down. This was from also May. Let's keep going. Let's go 2 more pages. Here we've got March 1st, 2022. So let's go back a page. March 1st, April, and around this date range, we would probably be looking for our Hex transactions around this date range. So once we find the relevant Hex transaction, let's just say this was the relevant Hex transaction. It's probably going to look like a Uniswap swap, right? Hex USDC pair on Uniswap v3. This kind of looks like it could be our sale transaction because you're looking for the moment that you sold Hex on Uniswap. I'm assuming most of you sold it on Uniswap, right? If you sold it on 1inch, then you're going to be looking for, a 1inch marker on Etherscan here in this 2 column. So it makes it kind of easy to remember what was just a general transfer or smart contract interaction versus what was actually a sale on a decentralized exchange, assuming, again, you sold Hex on a decentralized exchange, because that's the middle step, before selling it to CBOE Digital. Here, once I've identified my potential sale of Hex, I can drill into this transaction by clicking over here. And I can go ahead and look and see, okay, on this particular date, I swapped 1 million Hex for 33,000 USDC. In this case, they also went into BUSD for whatever reason. Again, this is not my real wallet. I'm just going into an example of how you would go searching for your specific sale. So you basically just go to CBOE Digital, find the date that you sold the assets, scroll over to Etherscan, put your address in Etherscan, filter by ERC20 token transactions, scroll to around that date range, in my case it was May 12th, and then look for that Uniswap transaction where you sold Hex either directly for ETH or you sold Hex directly for USDC and then into ETH, like some of us like me have chosen to do. So when you find the transaction, it's going to look something like this. In this case, this person sold 1 million Hex for 170,000-ish USDC. Sometimes the Uniswap protocol breaks up your transaction into smaller pieces to find, more convenient routes to sell it for. So when you're looking, let's say you're looking for a 1 million Hex sale, you might end up finding something that looks like this, where the protocol itself just divided the 1 million Hex into 650K and 350K because it just found a more efficient route to sell your transactions for. So that might be tripping you up if you're not finding the exact amount of Hex that you sold. Etherscan might be showing you, 2 sales because technically Uniswap on the back end, part of this transaction was sold for ETH, and then that ETH was sold for USDC. Part of the transaction was sold directly for USDC. That's just because it's a routing protocol, and what Uniswap does is it just routes your sales or your purchases through whatever is the most efficient liquidity pools, and at the end of the day, you still get what you asked for. You still get the USDC that you sold Hex for. And again, some of you might have sold for USDC and then into ETH. Some of you might have gone directly into ETH. As long as you can find this transaction, I'd say that it's a pretty safe bet that this is your proof, right? This is your blockchain proof that ETH was sold for this day. And then you can obviously go find the date that you transferred that to CBOE Digital, probably somewhere around the same date range, right? Within a week or two for the most part. Just look at your Etherscan history and find that date range. So in the case of this example, let's find the guy that sold 1 million Hex for what looks like 170,000 US dollar coin. We would want to jot this down on our Excel spreadsheet as the date sold. So let's hop over to our Excel spreadsheet and just make a fresh spreadsheet. I'm just using these columns for purposes of providing information to Brookhaven. The date sold, remember, was in my case May 12th. And let's just pretend that I had sold 1 million Hex for $161,000, okay? let's just pretend that I had sold 1 million hex for $160,000. So remember, the sale made was on May 12th, 2022. It was a sale of hex. And for the sake of the example, let's just say we sold 1 million hex for $160,000, and we got that information from Etherscan, right? Because we can trace the original transaction and see, okay, we sold X amount of hex for X amount of USDC. So remember, from that data that we found in Etherscan, we can go backtrack and we can go enter into our Google spreadsheet file that on May 12th, we did a sale of hex for, let's just approximate, right? For the sake of the example, we sold about 1 million hex for about $160,000, okay? Now, what was the cost of USD? We can easily calculate that by just doing proceeds divided by amount. So 160K divided by 1 million is 0.16. So we sold hex at approximately 16 cents on that date in 2022, okay? Now we need to go find the date acquired. The date acquired for a lot of us is probably going to be pretty old. Now, if you guys are like me, a lot of us got into hex in the adoption amplifier phase. So if you did get into hex during the adoption amplifier phase, I'm going to go over how to go backtrack and figure out the cost basis of the technical date you acquired hex as according to go.hex.com. Now, if you bought hex a little bit later, let's say you made your first purchase of hex through Uniswap. Well, in that case, you would just go back to, remember Etherscan? You would just scroll back in Etherscan and try to find the date that you acquired hex just by searching through your list of transactions. I'm going into this random account and we're going back in time. And for a lot of you, you probably acquired hex many years ago, 2, even 3 years ago. Let's say, for example, you think you bought hex around 700 days ago. You would just keep looking through to find the time that you bought hex. So if you bought hex on Uniswap and you're looking for your initial purchase of hex in order to get that cost acquired data, you're just going to be looking for a similar transaction to the sell, except instead of out right here, it's going to say in. So instead of hex going out of your wallet through Uniswap v3, you're going to want to look for whatever transactions show hex going into your wallet via Uniswap, either v2, it might even be Uniswap v1, right? Because hex has been around for a long time. So you're just going to want to look for a similar transaction to this one, except instead of a sale of hex, meaning hex going out, you're going to want to look for your purchase of hex, meaning hex going in. So that should be pretty simple to find through Etherscan if you look through some of your earlier transactions, because you'll know that it's identified by Uniswap as the smart contract rather than just a random address. But now if you're like me and you want to go back in time and find out what was your cost basis from buying through the adoption amplifier, well, let's hop over to hex.com, and because we're using the FIFO method, first in, first out, it really helps to find the very first transaction that you ever made. The cost basis on that could be somewhat beneficial, especially if you invested in hex on the very first day, okay? So this actually plays to your advantage if you bought hex early on the first day, because technically prices were pretty bad on the first day, so you might actually get a little bit more of a lower capital gain, assuming you bought hex on the first day. So for example, this is that same example wallet that we're using, and I plugged it into go.hex.com using customhex.com. By the way, that's a tip you can use, guys. Customhex.com is a plugin that was made by a community member, a well-known community member, the same guy that actually made the hex.com website. He also made freepulse.io, and he also just made a Google plugin where you don't actually have to have your own MetaMask wallet handy. You can just plug in anybody's public address into customhex.com, and it will let you view all of their statistics on go.hex.com. So as we know, pretty much the only relevant data on go.hex.com are the stake tab and the transform tab. Now remember, this is a random Ethereum address that I plugged into customhex.com, so we're viewing this through the lens of some random address, right? We're scrolling back in time to the transform lobby, the adoption amplifier transform lobby, and we're trying to find the date of acquisition. So, for example, this guy bought on day one, just like a lot of us probably did, right? This guy put in 22 Ethereum in exchange for 1.381 million hex. Now, there's a little bit of math you have to do. It's a bit complicated to figure out the cost basis, right? Because all you have at your disposal is that there was 22 ETH exchanged for 1.381 million hex. So on our calculator here, we can do some quick math and say, how much ETH did we pay per hex? So it's 22 divided by 1.381,000. That's an average of 0.0000159 ETH per hex. So now that we have this number, we need to hop over to Yahoo Finance to figure out what was the price of Ethereum on that day so that we can get a US dollar value, because right now this is the this is the price of Hex that we bought in Ethereum terms. We need to multiply this by the price of by the price of Ethereum on that particular day. What day did Hex launch? Well, you can hover over the adoption amplifier day right over here. So day 1 on a 351 was actually December 2nd, 2019. Let's hop over to Yahoo Finance and let's look up ETH USD, okay? And you can look up ETH USD very simply in this top search bar. Go to historical data right over here, and we could find the price that Ethereum was at on that day just by filtering the time period. So we're going to filter the time period here. We're going to go all the way back in time to 2019, long ago. And we're just going to pick a date range from, let's say, December 18th, 2019 to December 20th, 2019. Oh, it's 2023. I need to go back. 2019, December 20th. So we're done. We click apply. And here you can see that on December 19th, the price of Ethereum was roughly, at the close, it was roughly $129. So we go back to our calculator here, we take this number, we multiply it by 129, and this is the average USD price that we bought through the adoption amplifier on day 1 in Hex. When we traded 22 ETH for 1.38 million Hex. So your cost basis, your price of acquisition for Hex is technically 0.0021. Let's hop over to our spreadsheet again. And let's say that on December 3rd, 2019, sorry, it's actually December 2nd, 2019, we bought Hex and we bought 1,381,000 Hex for a cost of 0.00021, approximately, okay? Now, to get the proceeds from this, to figure out how much money was that actually at the time, how much money was actually spent, we can simply just multiply this by 1,381,000. Let's say that, okay, we put in about $2,838 at this time. 2,838, okay? So now you can basically calculate. This is really the data that the IRS cares about. What day did you acquire the Hex? How much did you buy for what price? And I just showed you how to do that on the Transform Lobby tab of go.hex.com in tandem with Yahoo Finance to find the actual USD price of Ethereum on that day, right? Because go.hex.com won't show you that. But you just do some simple math and you say, remember you bought 1.381 million Hex at an average price of 0.00021, and that comes out to about $2,838. So your net gain and loss is simply $160,000 minus 2,838. Your net gain and loss is 157,162. So that's it, plain and simple. You really don't even have to add staking data if it is irrelevant to you. Now, the times where reporting your stakes would be useful, this might not be relevant to a lot of us right now. It might be relevant to a select few of you, but in the future, it might become relevant where if the amount of Hex you're selling is more than the amount that you acquired, if you can't point to a date of acquisition that's greater than the amount you sold, for example, if I'm reporting that I sold 4 million Hex, but I've only ever purchased 1 million, where did all that extra Hex come from? Well, in some of your cases, your staking rewards will be so large that you'll need to report them in order to account for where all that extra Hex was gained from. Does that make sense? So if I'm selling 4 million Hex, but I've only ever purchased 1 million, but I have 3 million Hex in staking rewards, I'll probably need to provide that information just to clarify where that extra Hex came from. Now, this is probably not relevant to a lot of us because for the most part, I'm guessing we're not going to ever sell our whole bags. So we'll always be able to point to one, acquisition date for one certain amount of Hex, and we'll always be able to point to the sale of hopefully less Hex than was actually acquired. Especially with the astronomical gains in Hex, you never really need to sell all of it. But if you're somebody that sold all of your Hex, let's just say you're somebody that sold all of your hex. That's okay. But if you sold all of your hex, you probably sold a bigger quantity of hex than you ever initially purchased, assuming that you staked some of it and you made some staking rewards, and those staking rewards now make your total pool of hex higher than you ever actually bought. So in that case, you'd probably also need to report your stakes as well. So in order to do that, I would just make a new tab on your spreadsheet here, find the date staked, the amount staked, the date you unstaked, and then the amount you unstaked, so that people can calculate your principal and your yield. And to do this, you could also very simply hop over to go.hex.com, hop over to the stake tab, and go and find your initial stakes. Let's go find let's find a longer stake that makes more sense. Here's a pretty good one. This guy staked from February 2nd to February 5th, 2021. So this guy staked for over a year. And this guy started with 176,000 hex in principal, plus 105,000 hex in yield. Basically, they ended up with 281,000 hex. So they started with 176. You could just copy 176 over to amount staked. They ended up with 281K. Actually, you can just copy this to amount unstaked, and then you just pick the date staked, which was, what was that? February 2nd, 2020, and then February 5th, 2021. So February 2nd, 2020. Date unstaked was February 5th, 2021. And then this would just be a way to explain where all that extra hex came from if you're under the circumstance that you're selling more hex than you ever actually acquired, because the IRS would probably want to know, hey, where did all that extra hex come from? Well, you could explain it came from staking rewards, and then you can verifiably prove on the blockchain that here's my transaction right here, here's where all my staking rewards came from. If you actually did get audited, you would be able to point to the go.hex.com screen, either the screen, or you could point to the same data on Etherscan, because all this data exists on Etherscan. It's just a little more hard to read, but that would be where you could trace back all the gains from and all the yield that you earned to explain, hey, this is why I'm selling so much, but I didn't actually ever buy that much. I minted my own rewards over time, and that's why I have all this hex now that I'm able to sell. Now for me, this is not really relevant because I just made a pretty small sale relevant to my entire stack. The amount that I sold was very small, and it might be the same for most of you guys as well. So for the majority of cases, I imagine you'll really just need to say, okay, every single date that I sold on CBOE Digital, let's go find those sales on Etherscan. Let's go find the date acquired, either from the Adoption Amplifier Transform Lobby tab or from Etherscan if you bought on Uniswap as your initial purchase. Record all that data. I only have one transaction, but you might have 3 or 4 or 5. You might have a lot of transactions. It gets more complicated the more times you sell because you just have to do that much more work. But at the end of the day, all this work should only maybe take you half an hour if you're keeping it simple and you're just looking up all your transactions. Again, you just scroll through Etherscan to around the time that you sold on CBOE Digital, find those transactions. They're going to be marked as Uniswap trades, most likely, assuming that you sold hex on Uniswap, and then go find where you started from. Go find where you initially first purchased hex. If you're using the FIFO method, go find your earliest purchase, either on Etherscan or in the Transform lobby. For me, it was the Transform lobby, so I need to scroll all the way back to go.hex.com, find my very first purchases, and do the calculation of the US dollar calculation, which is kind of the way I showed you, right? So I believe this information should be enough for Brookhaven to calculate your net gain and loss and then submit that to the IRS. And again, if you're in that rare case where you're selling more than you ever bought, you might also need to record all your stakes just to prove that, hey, this is where that extra yield came from. It came from staking, and here's all my staking data, right? Pretty simply copy and pasting it from go.hex.com. I hope this was helpful. And again, nothing is quite black or white, but I'm reasonably sure that if you provide enough information, basically the IRS just wants to know how much money did you make so we know how to tax you properly. So without lying, these are all legitimate, data points from date acquired, date sold. Again, this was an example using a random Ethereum address. So your data might look a lot different than mine, but you're going to be the person that's best able to sort through all this information. So I wouldn't want to leave this entirely up to the hands of the people at Brookhaven because, let's be honest, we know about our own transaction history way more than anybody at Brookhaven, and the time that it would take to explain all this, your individual case to Brookhaven, you're better off just doing it yourself anyway. You can be more accurate, you can do it faster, and you can have more control and basically just make sure that Brookhaven ends up filing it accurately and filing it quickly. So there's no hiccups, there's no going back and doing it over again. The more accurate you can be at this step, the faster your taxes are going to get done and the more accurate you're going to be. So yes, it is a manual process, but this does give you more control over the outcome of your taxes. And at the end of the day, I think this is the most efficient way for us to file this information personally and manually send, a CSV file or an Excel file over to Brookhaven so that they can just plug in these numbers and file the taxes from there. It shouldn't be on them to go search through every individual's Etherscan transaction history. In my opinion, if they had to do that, they would never be able to finish the tax season. So let's take some of this into our own hands. Let's find our own data, find those needles in the haystack, send those over to Brookhaven and just make sure that everything goes smoothly. I hope this was somewhat helpful, and we'll see what Blake has to say on top of that. But thanks and have a good one, guys.
Hey, this is Megan with Brookhaven Tax and Accounting Professionals. So you just learned about the spreadsheet method from Crypto Coffee. It's a great way to track your stakes going forward and review your staking activity for last year. Is the spreadsheet method for you? At the end of the day, that's up to you. As you've learned, it's more time consuming, but it also may be more accurate than Coinly or any other software that you use. If you had only a few staking transactions last year, Coinly may suffice so long as you verify your transaction list is accurate and complete. If you had a lot of staking activity last year, it might make more sense to use the spreadsheet method. You might ask, what's a lot of staking? That's subjective. If you only had a handful of staking transactions last year, Coinly may be sufficient. If your staking activity was continuous, the spreadsheet method would likely provide more tailored data. In this video, I'm going to show you how Coinly recommends that you categorize transactions involving HEX. Should you have a small number of proof of stake transactions and prefer to manually make edits to each. So first, I want to walk you through a recap on filtering. This is just a reminder that you can filter by wallet, filter by crypto type, filter by transaction type, transaction label, manually added transactions, transactions to which Coinly has applied a warning tag, or by date. And here I have just clicked the year 2022 to narrow it down. Finally, you can also sort by oldest, newest, or transactions with highest gains. One other thing I wanted to point out in this section is to remind you that deposits are the same as received transactions. Those two things are used interchangeably in Coinly, as well as send or withdrawals. So if you have assets coming in, you may see them listed as deposits or received. If you have assets going out, you may see them as send or withdrawal. Coinly has its limitations, like any other software, and one of the things that it seems to struggle with is cost basis tracking for staking. Coinly defaults to 0 basis when basis is otherwise unknown. This is the most conservative approach, but it may also inflate your taxable income, depending on what your actual basis was. This is why it's critical going forward that you keep an ongoing log of your transactions. We can't, and don't, expect you to remember off the top of your head exactly what you staked and when. It'll be critical that you have data going forward with which to reconcile Coinly or any other software you're using to ensure that your transaction list is valid for IRS reporting. If you're going to use the spreadsheet method, after you remove all proof of stake crypto over to the spreadsheet and you can verify the accuracy and completeness of your spreadsheet, remove the HEX in Coinly by doing this. All you'll do is click here on all of your transactions involving HEX and you'll just click delete. Now, again, don't do this until you're sure that your spreadsheet has all of these transactions logged in it as well. What this is going to do is ensure that you're not showing duplicate transactions. No matter the method you use, you still need to go back through, even after your HEX staking transactions are moved to your spreadsheet, just to validate the accuracy of the data that was imported into Coinly. We've had a lot of folks make us aware of certain junk airdrops that were incorrectly represented within their Coinly account. While we can't really validate those statements, we do recommend that you ensure that your transaction list is not only complete, but correct. Coinly is still useful in tracking non-staking activity. It can handle things like airdrops and proof of work fine. If you're tracking your staking outside of Coinly, you also just need to ensure that at the very least, the other transactions within Coinly are complete and accurate within your software, even if it's not Coinly. So you might ask, if I'm using the spreadsheet method, do I need to even use Coinly? Yes, even if you're using the spreadsheet method, Coinly may be a good way to track and record your non-staking activity. That's why we believe its use in conjunction with the spreadsheet method is ideal. Software like Coinly may help you account for transactions which you could have missed otherwise. It also might help you provide a record of your transactions in the case of an audit. I do want to make it clear that I'm not a Coinly expert, and neither is Brookhaven. We have done the research, and we are making this video just for educational purposes so that you don't have to do the legwork. We've already done that for you. We're also trying to help promote accurate and complete reporting of crypto transactions, along with providing a methodology as to how your transactions are substantiated if and when you're audited. We can't attest to the accuracy of Coinly, which is why it's critical that you review your transactions to ensure the list of transactions is complete and, once again, accurate. You know your crypto best. Thanks. We'll see you next time.
Hey, it's Blake Shaper again with Mountain Crypto Advisors. We're going to spend a little time walking through the spreadsheet method and how you record this information. I've got pulled up an Excel document that's going to look a little different than what Crypto Coffee went over in his example. A few more columns added here, just a little bit more information that we're asking for to ensure that your taxable transactions are reported in an accurate manner and a complete manner. The document's titled in the top left with 2022. The assumption here is that you're going back, if you so choose, and populating this data with historic information. But the goal here, especially until we've got some software that's more efficient, and I know Megan, myself, and Crypto Coffee have talked about certain limitations of softwares like Coinly, especially when it comes to proof of stake. Until we have a solution there, manual transcription is really going to be the best and most accurate way to determine what's taxable and ensure that it's reported effectively on your tax return. That being said, no one wants to go back and figure out for the last year what taxable transactions happened, what stakes happened. So what we're going to recommend going forward is that this document, although we're using it right now for historical information, is really going to be used going forward as a way to record in real time stakes that you make, so that come this time next year, you've got your full and complete list and you don't have to worry about going through this exercise. And we're going to talk about that and send out quarterly reminders, answer any questions you've got. And this process will probably change a little bit and improve, and hopefully get to the point to where it's not needed eventually. But right now it is the only logical solution to ensuring that we're tracking everything, especially that cost basis of your staking transactions right now. So the document itself has two tabs. The bottom left, you're going to see a staking tab and you're going to see an off-ramping tab. We're going to go through both and I'll use examples. So let me go over to the off-ramping tab, blue. This is the tab that Brookhaven is going to be the most interested in. Why? Because when you off-ramp is when the taxable event occurs, and that's what we've got to focus on for your tax preparation. We are of the opinion, and I've said this before, there's no guarantee here. We don't know exactly what the IRS thinks, but we're of the opinion that until you convert your HEX to, let's say, Ethereum, to another crypto, it is not taxable. It is not taxable while it is staked over the period and the accrued yield. It's not taxable when the stake ends. It is taxable when you off-ramp to another crypto, when you're converting from one crypto to another. So, and that's clearly taxable. The IRS has been crystal clear on that. But the rest of it's kind of a gray area. Could our interpretation be wrong? Absolutely. The IRS could make the position that a 15-year stake is taxable every year on the accrued yield as interest income. That's theoretically possible. That's in fact how CDs are taxed. So there's nothing here that is really crystal clear. But our position is that once you go to Ethereum, it is taxable, and that's what would go on the off-ramping tab. And that's why Brookhaven's so interested in this tab, because this is what summarizes your taxable events for the year. We'll come back to this tab. Let's go back to staking. I'm going to walk through an example here, but let's first just go through the columns. So the first column is really just a numeric list of your stakes, 1 through however many you had. You can add to that list even if it ends. I think there's like 150 on here, so probably not likely, but this is just a numeric listing of your stakes. Quantity is the number of tokens or coins. Description of asset, just the crypto, so HEX, if we're using a hex example. Cost or basis, that's the monetary USD value of that stake. Start and end stake date, pretty self-explanatory there. Restake, this is one of the more important considerations for this particular tab, because this is an option. There's 3 options here: yes, no, and partially. So what do those mean? I'm going to try to zoom in just a little bit here, make it easier for you to see. So this drop down for restake question mark, yes, no, partially. Yes means you took 100% of that stake that ended and you rolled it into another stake. Not a single token was converted. No means not a single token was restaked. That you took 100% and you off-ramped it. You converted it to Ethereum, then you did whatever you wanted to after that point. Partially, and this is probably the most common from what we've seen, a lot of folks like to take the yield, off-ramp that, and then keep the principal and restake it. So partially means you did any combination of restaking and then off-ramping of a stake that ended. Yes, no, and partially. And what you'll see here is that depending on your selection, there's going to be some directions that pop up to the right in column I. And we're going to go over those. Don't worry about reading it right now, but they're different based off of yes, no, or partially. Different directions, you're going to treat it differently. Column H here, original stake date, is the date that the original stake was set. So if you're rolling a stake forward, let's say you stake for a year and then you take it and you roll 100% or you roll a portion of it forward, you would put that original stake date, not the new stake date, the original stake date in here. We'll go over an example. This helps us determine long versus short-term capital gain treatment. Now, something that comes up continually is, what about HIFO and LIFO and FIFO and all these different potential accounting treatments for crypto in general? And we're going to look at that, but the best way to determine the most appropriate treatment is really to have a specified and specific listing of everything that occurred and when it occurred, when your stakes ended, when they were rolled forward, and tracking that cost basis through that process, which again is the main limitation of programs like Coinly. Now let's say that you've got another stake, and I didn't put an example. We're going to say you're doing another $1 million stake. Another $1 million stake, and this time, let's say, it's $10,000 you're staking out. And you did this one last year on, let's say it was the 1st of February, 2022, and you did another year-long stake. Remember, this only becomes relevant when the stake is ending, that you're really putting in. I would still put it in as you're doing this throughout the year for when it starts, just so you've got a record and you know what to populate. But a lot of the math here is not done until the stake ends, obviously. So we're saying it ended on the 1st of 2023, of 1st of February, excuse me. Now it's partially. So this one's the most complicated of it. And let's say you're partially. So original stake date is what, 2/1/2020. Okay, so you've got, here's the directions. Carry proportional basis to off-ramping tab for any stake you off-ramped. Start a new stake line on this tab with a proportional basis and record original stake date in column H. That probably makes 0 sense to you, and that's okay. What do we mean by proportional basis? Well, if you off-ramp 50% of the stake, you need to take 50% of your basis and carry it forward. If it's 30%, if it's 20%, whatever percentage of the quantity at that time. So let's say it's, again, you bought 1,000,000 X for 10,000. Let's say it's worth 2 million, right? When it ends, 2 million. So what percentage are you taking of that? Let's say you're taking 1,000,000. You're taking that yield off. So now you've got 1,000,000 that you're taking off, and you're keeping 1,000,000 here. So let's start with the 1,000,000 you're keeping here. So you're going to restake that 1,000,000, restaking the principal X, and now what goes here? It'd be 5,000. It'd be half of, I know this is a little math, but it'd be half of your original cost basis, because that's what you restaked. Staking it, let's say it's the 15th of this year, just a few days ago. We don't know the end stake date yet. We don't know if we're going to do that. The original stake date was 2/1/2022. Okay, so that's good there. Now the off-ramping. What are we doing here? Well, we got to carry that forward. Remember that other 1,000,000 that we took off? So taking the yield right there of Hex, converting it to Ethereum. What was the original date? Well, it was 2/1/2022. When did you convert it? You said you converted on the 15th of 2023, not 5. What was your cost basis? Well, it's not 10,000. You off-ramped 50% of it, so it's 5,000. It just happens that it's the same cost basis for both the portion that you're off-ramping and the portion that you're keeping. That won't always be the case. It's just a 50% split here in this example. Let's say it was 30% that you off-ramp. It would be $3,000 here, 30% of the 10,000. Let's say the sale price let's say it went up to 15,000. What do we mean by sale price? We're talking about the price, the monetary value of your Hex at the moment you converted it to Ethereum in this example. Let's say it was 15,000 there, and again, we'll have this filled out here, but what's your gain? $10,000 gain. Pretty simple. That's it. So really, when you got a stake, there's only 3 options. Restake entirely, don't restake any of it, or partially. The hardest one is that partial, because you're doing a little bit of math there. You got to figure out the percentage. You got to make sure you carry it forward. Now, what we're going to need at Brookhaven is a completed list, this off-ramping one specifically, for the previous year, if you so choose to do this. If you want to use Coinly and you understand the limitations there, that's fine. Now, you got to pay attention to Megan's video, because anything you're putting on here, you don't want to be duplicated in Coinly. We're going to make this more streamlined. Again, this is a step towards improvement. We're tailoring this process to y'all. I know this is not fun, but we want to be accurate here. And the big thing is that we want an audit record. If you're knocked on the door by the IRS, we want to make sure we have something to substantiate your position, and this type of historic record keeping helps do that. We appreciate your time watching this video. If you've got any questions from us, let us know. Hope you have a great rest of your day.